think, we can get started. So again, I've kind of, characterized this little presentation, how to capitalize on 3 big moves on the daily charts over the next few months. Before I kind of get into it, just want to kind of give you a feeling every day. For those on my daily email list, I send out an email, and last couple of emails, I've sent out, this was on Wednesday, in the pound versus the Australian dollar. We'll take a look at all these on the real-time charts. Suggested getting in at 182.05. I think it's about 200-300 pips higher than that right now. And hi, Chua. We have Chua on the line also. And so these are, the daily emails. I've kind of left out the analysis that goes along with it, but I'll discuss that in a moment. So I always show you kind of what I'm looking at on the chart, and then, kind of set up the trade. And like I said, there is also an analysis that describes everything that I'm looking at. So the whole purpose of my program, the whole purpose of why I started the Pattern Trader, this is not a managed account. This is not a signal system. Frankly, if you just copy and paste my trades, you'll really, learn nothing. The whole intent, the whole objective of what I do is try and show you how I use a combination of price action, price patterns to determine entry points, risk reward entry points for high value moves. And I am looking for the broader moves in the markets. I'm not looking at a 15-minute, time frame to try and extract 7 pips or 15 pips or 21 pips, using some kind of Bollinger Band or moving average crossover or what have you. So I look at the larger setups that should lead to the larger moves. In fact, now I'm looking at pound Australian. I saw the double top within a broad ascending, broadening formation, and actually told our members to start shorting pound Australian with the objective of 178 many months ago. So this is what I look for. Recently, I also bought the pound versus New Zealand dollar in an email, and then also recently sold the dollar versus the yen. Right now, I'm looking at gains of about 130 grand in the market based on these positions. Now, these are, open positions. They could go to losses. They could go to greater profits. But that's kind of what I look for. And so, all of the trades that I send out, I also place, on my trading platform. And this is currently what, we're looking at. So I kind of just wanted to share with you my thinking, how I kind of drill down and, seek out these high value trades. And then every day I send out a daily email with my thoughts. And, before it's just like my weekly, you guys get my weekly email. But let me just kind of send you what the daily email looks like. All right, so let me just get out of this. Sorry, I'm just trying to find an example so that you can kind of understand. And I had one, and I just must have X'd out of it. Sorry about that. But I think it's just important that you kind of get a feeling of what these daily emails look like before I kind of move on. So this was just a few days ago in pound versus Australian dollar. So again, what I try and do is give you a very good look of what I'm looking at. I'll go to the real-time charts in a minute. So I'm looking at this bottoming price action within the context of a long-term chart. We'll take a look at that. And so basically, I have been, handicapping the long side of pound versus New Zealand for a long time, notwithstanding the fact that there are a whole host of times where this thing really comes off and I do these counter trend trades. But I think on balance, this is in a stealth bull market, and I'm always looking for opportunities to buy it. So what I look for is a pattern and then price action that then gets me in the direction of the trade, and I also understand where the risk is. So, to my mind, you need to understand the cards you're holding, because obviously the markets get very difficult. You can see in October, it was a very difficult month, and, it was back and forth. And that's why, if you're trading on short-term time frames, it's easy to see, how you can get chewed up. In October, you went everywhere and nowhere, and yet this bull market is still somewhat intact, and, still going to the upside. So what I try and do is, again, identify what I'm looking at on the chart, and then give you kind of a trade setup, where to buy it, with the risk provisions, where to put the take profit. Now, there's always a lively discussion on stop loss and take profit. So I kind of use, certain levels to establish a stop loss price. In this case, it was under these recent narrow range or inside day bars. And then, to my mind, the take profit is usually somewhat arbitrary. The take profit, I usually put far away intentionally. I'm not trying to, see if I can get, this take profit taken out the next day. So I put this at, 202.87, which is somewhere up here, somewhere where this resistance is. And it's somewhat arbitrary, because what I want to do is I want to see how prices, go or don't go once, my trade is triggered. Now, it's very important, I also, put a buy stop on every trade, or a sell stop if, I'm trying to get into it. And the reason is that, I do my analysis, and then I'm looking for the market to confirm, whether, I'm correct. So you can see that where that arrow is, it's slightly above, the high of that inside bar. And so, if the next session the market opened and then started going down, then my buy stop would not have been triggered. So what I'm trying to do is have the market confirm what I'm looking at. So, after all, my analysis is, subjective, it's human, it's subject to being, incorrect. And so what I want is for the market to confirm what I'm looking at. And so, I'm usually putting a buy stop on something I'm looking to, get long, or a sell stop on something I'm looking to get short. And then I kind of, include the rationale of what I'm looking at on the chart, in the analysis section. So I said pound versus New Zealand dollar has formed an Eve and Adam double bottom. And the Eve is, you have two attempts at a low, and an Adam is the single attempt. But whatever you want to, call it, to my mind, it looks like this is a brewing double bottom. And if that's the case, then, there's an enormous trajectory ahead of this. Pound Australian right now is actually a little bit more favorable, and I'll look at that in a minute. And, I said pound New Zealand has been rising in fits and starts along a long-term uptrend line. I'll look at the weekly chart. And then I said penetration above the past 4-session inside day bars. So you can see that you had this huge coil. You had these 4 days where it just, sat there. And then, I, always anticipate that there's going to be an unleashing of forces. And by virtue of, various bullish price patterns I was looking at, I was surmising that the forces would be, to the upside. And, then I kind of give you the definition of an even Adam, double bottom. And so what I try and do is give you a lot of tools to understand and learn price pattern and price action so that you can anticipate moves for yourself. So really this service is to liberate you, not make you a slave to some kind of signal service where you don't know why the trade was put in. Even if you're profitable, you learn nothing by it. So what I try and do is, if something happened to me, give you the ability and all the tools to become independent so that you can become independently financially viable and use the markets as a tool to grow your account infinitely. So with that said, let me kind of just peel back the layers, kind of look at, what I'm looking at right now as emerging opportunities. So I'm going to start with the euro versus the Japanese yen. And again, I'm going to show you how I kind of use the longer term time frames to then whittle down and use the daily charts to, exploit these, these trades, because we see, the bigger time frames, but, sometimes it's difficult, to translate into a, high value risk reward. So I'm trying to kind of select a time frame. Let me see if I can get rid of some of these days just to kind of make it easier for you to see. Okay, I think that's a little bit better. And it doesn't matter if you can't really see the granular, thing of each bar. But what I'm trying to do is, I kind of like set back and the first thing I try and do with any chart that I'm looking at is understand what is it, what is going on with this chart. And really it should be an exercise where you could explain it to a 6-year-old. So if I opened up this chart and I said to a 6-year-old, what is the direction of this market? And while it's not really apparent, I mean, this thing has been, kind of going like, this. But on balance, if we look at, prices in 2014 at 150, we're at 123 right now. So in fits and starts, the trend in euro yen, has been going lower. Now, the market always, throws you different curves. It tries to throw you off the scent. It throws you a lot of misdirects. And, just like a magician, always make the metaphor that, magician doesn't just walk out on stage and pull a rabbit out of the hat. He always, kind of has you kind of looking at his left hand, distracting you while he's pulling the rabbit out of the hat with his right hand. And the market kind of does the same things because it throws to you certain shapes, certain directions, and I'm a big believer in pattern, which then, kind of indicates direction. But, sometimes it's not easy to sort through because, we had a whole bunch of patterns here where, this looks like a double bottom. And then recently, this looks like a double bottom. And so we'd say, okay, well, I'm going to get out my chart textbook and, my different things on the website. And, these look pretty clear to me that, these are bottoming patterns, which should indicate that, this is, going to go higher. But to my mind, when you make a bottom, you should then bottom. You should then make a series of higher lows and higher highs. But what we see here is that, after we have these bottoms, you have a series of lower highs. So that's not consistent with a rising market. That's not consistent with how this pattern should work. So, I always look at, these patterns and then, kind of look at, are they actually developing? So, we see patterns all the time. And then I always defer to the market as to, is this really developing, in the way it should? So, again, when we see a bottom, we should see this. And the market should tell us that by looking at rising prices. Similarly, when we, maybe see a head and shoulders top, then we should see this. And if it kind of stalls out and starts going the other way, then, something's wrong. So, you can't, patterns just aren't set in stone. This is the early mistake, I made when I first started trading. I first got, started getting turned on to technical analysis. I got really excited. I made some early money. I started studying everything I can. I got my hands on all of these classic technical manuals and, saw these chart patterns. And then, I would just see a pattern and then say, this is it, just, go to town. And it's taken me several decades to kind of understand the nuances and the chinks and how the market throws you different curves and how to look at those curves. And so, again, it's also, we've seen this coin where you can either see, the coin as an old lady, or it shows you something very else, something very, else. And so our mind and our eyes sometimes play tricks with us, where we see certain things, and then that's what we see, and we don't see the other things that are going on in there. And so, to my mind, first off, like I said, if we were asked a 6-year-old, what is the direction here? The direction, has been lower. And look how amazing that is. It never ceases to amaze me how, you have years and years of trading, arbitrary things, pandemics, Bank of Japan releases, all kinds of things. And yet you have these 3 points of intersection along a long-term downtrend line. So that to me is always just amazing how the market is able to do that. And it's not by accident. The markets, does bounce off these, support and resistance lines. I don't really hone in on support and resistance. Yes, I'm observant. What I really do is I look at patterns. So to me, within the this is a downtrend. And within the confines or context of this downtrend, what stands out to me are these patterns. So this, to me, it's very unconventional, funky looking head and shoulders, but that's what it is. And it looks like a woman or man's left shoulder, the head, and the right shoulder. Now, this is a bear price pattern. When you see a head and shoulders, it indicates a reversal of trend. And by and large, that's what we've seen since that head and shoulders was formed. Now, since that was formed, sometimes, we get, breakouts and then a retest of the breakout. And that's what we saw in this time frame, where we came back to this declining trend line and made this double top. And you can see that recently we just bounced back and retested the breakout area of this double top. And now you see that, we're kind of forming another top right here. And to my mind, the confirmation would be a hair above the 122. So if we start traveling back here, this would indicate that, we have another top along this descending trend line in a primary downtrend, and that the path of least resistance in euro yen is going to be lower. So this is kind of what I look at. I look at kind of the big picture, and then I kind of, understand the cards that I'm holding. That yes, and I if you were on any of my webinars, I was saying in this time, yes, this is a double bottom, and it could translate to some nifty profits. And I'm not against taking out what I call counter trend trades. So this to me, when the market goes up, it's counter to the main trend, which is going lower. So there are all kinds of times where you can make, lots of money going against the trend, but you have to recognize, and I do, that my objectives, my take profits are very different, for a trend trade versus a counter trend trade. And so now it looks like we're going back in the direction of the trend, and my, objective would be to take out a whole bunch of pips to the downside here in the next flurry. So now once I feel like, okay, something is shaping up, something's going on within the context and the dynamics of a longer term opportunity, then I kind of peel it back and look at the daily. And this is kind of the analysis that I send out every day to those on my daily or elite program. My team will discuss that with you. I'm not going to kind of get in the weeds about that today. This is merely an opportunity to show you, my thinking, my analysis, and how, to me, price dictates everything. So we have a lot of background stuff going on in the world today. I mean, a lot. You could spend your whole day looking at, the BBC or, internet forums or what have you, it will do nothing but confuse you. And, that's not how, the markets work. The markets are ahead of the information. The markets are a discounting, force. And so, in, the height of the pandemic here, you can see that euro versus yen staked out this inverted head and shoulders. It crossed above the neckline, which suggested for the time that there was going to be a good opportunity to the upside. And this is what I call a counter trend trade. So, we saw on the weekly chart that the primary trend is lower. So even though I was looking for an opportunity, the upside based on some, short-term patterns, and again, there's all kinds of money to be made from 117 to 126, is, a lot of money to be made, $9,000 for every $1,000 you put up if you get that right. But now, I'm seeing this head and shoulders. So again, head and shoulders, like we saw in the long-term chart, we have left shoulder, the peak is the head, and that's the right shoulder. And you can see we've rallied back to the breakout area, and now it looks like we're rolling here. And we put on what appears to be a double top. Now, that kind of won't be confirmed until we hit this 123, but this is the shape that I'm starting to look at. And so now here you have the inside bar. So what I look for is, kind of a gestalt. You have a downtrend, you have the head and shoulders, you have this double top, and now you have what I call an inside bar. So you can see that yesterday's range, literally from high to low, sat within the range the previous day. It snuck out a little bit, but by and large, it was what I call an inside bar, where this represents a coil, a building of energy, and then by virtue of the downtrend and the bear patterns that precede it, I'm going to bet that the energy is going to be unleashed to the downside. So I would simply put in a sell stop here, look for the market to confirm my analysis, put a stop loss somewhere out of the way up here. That would be my risk, and that would be my reward. So that's what I'm looking for in my trades. Is it, does it, always happen? No. But, if you can just do 1 or 2 trades a month, and that's all I look for, is, 1 or 2 trades a month that are going to extend for 300, 500, 800 pips. And it doesn't always happen. October's been a very tough month. October has been a, high churn month where, trades just don't get going. But it doesn't matter. As you saw in my P&L, I just have 3 trades, and they've made back more than half my losses for October. So, October's been a shitty month, a lot of churning, a lot of trades just get stopped out. But on 3 trades, I can make it all back in a hurry. And that's really what it's about. And it's really about math. So a lot of people construct their trades where they're looking for, 10 pips on a trade or 15 pips, or I don't know what you guys look for on a, trade. You set up your 15-minute chart, you look for some crossover and, even 20 pips. But to my mind, if you're going to try and make 15 pips, you have to risk 10 or 15 pips. And then, you got to remember that there's 2 or 3 pips that you're paying to your broker. So if you're trying to make 15, then you got to risk 17. And to me, this is a 1-to-1 relationship. So, if you're trying to make 15 and risk 15, you've got a 1-to-1 risk reward. And to my mind, this means that you've got to be 80, 90% correct on your trades. You've also got to overcome the spread. And that's just not going to happen. And so what I try and do is I try and set up, not all the time, is it conducive? I don't do a trade unless I can get 2-to-1, but overall, I try to get a 3-to-1 risk reward. That means if I'm going to risk 50 pips, I want to see an outcome where I'm going to make at least 150 pips. So, to me, I don't want to watch the screens. I don't want to, have a heart attack every 4 minutes. If I can't see, that a market's going to cough up 150 pips, if I can't see a path forward that I can see, at least, that kind of, trade, then, frankly, I don't do those anymore. I'd rather I sit on my hands. There are many days where I say no trades today. And, so that's what I'm looking for. And the math will show you that you can actually lose 72% of your trades with a 3-to-1. So if you set up your trades where, you've got 3 times the outcome for a given risk, you can actually lose 72% of your trades. That's why, I can make money just with 1 or 2 trades in a month. Then a bunch of them break even, a bunch of them I make, 50 pips here or 40 pips there. But overall, all I'm looking for are 1 or 2 trades that extend for, 200, 300, 500 pips or what have you. And that's really, the game is, playing for the long term, right? Where you're trying to tag, trades like this. You're not, trying to guess what's going to happen every 15 minutes in flurries like this. And so this is what, this is how I, deconstruct and try and put on a high reward relative to risk trade. And I think that that's a completely, valid scenario. And guess what? Goes out, stops me, I lose 67 pips or what have you. No big deal. I usually advocate that you only risk 0.5% on any given trade. So that means if I send you 10 losing trades in a row, you'll lose 5% over that string of trades. I could have 1 trade, that I make 15% on. So I've, won 1 out of 10 trades and still up 10%. And that's how I've figured out how to become a long-term consistent trader. I don't care about the losers. In fact, the more losers that back up, the more excited I get because I know I'm getting closer to a winning trade. So Chi, I'll take a look at your questions in a moment. So let me just back up and look at some questions. I don't know what CFX is. Pat. She says to trade on a weekly trade, you're more like an investor, not so much of a trader. Say if I wanted to trade at the 1 hour chart, the weekly, the monthly, doesn't matter to me. I've been doing well in the lower time frame. So I don't go any lower than the daily chart because to me, it really becomes, gambling. Like I said, I want to start out with understanding, the big picture and then drill it down to the daily. If you start drilling it down to, a 15-minute chart, yeah, you can see this looks, pretty bearish. You have the double top here. And by and large, this, maybe is something that, you could catch. But, and it does look, consistent with what's going on. But very often, like pound Australian, you see the double top here. And even though, this thing looks like it's going to go much higher, if you see the double top here, you short it. And now all of a sudden it's back up in your face 15 minutes later. So by and large, I just, again, it really depends what your objectives are. And I'm looking to make the bigger money. So I got into pound Australian all the way down here at 182.01. And I've got 230 things. Yes, it's making a key reversal today, which is completely consistent with what it should be doing. It's trading right at the resistance area. But again, this is why I look at the big picture. So to me, well, let me just start off all the way back here, where I was looking at this time frame and telling our members that this was trading within an ascending broadening price pattern. This is a bearish price pattern. And so not only did I see the ascending broadening price pattern, but I saw the double top here. It was kind of an even atom double top. And then I saw these inside bars right here, where you can see both these days, the trading range was inside the range here. And I sent out an email right there to get short. And I said my objective was 178 because that was the beginning of the ascending broadening triangle. So, I captured just a monster move in this downtrend. But, I'm surmising that pound versus Australian based on the weekly is in the stealth bull market. It's kind of tricky. I could be wrong, but, now we've formed another pattern. And I think that this is the real pattern where you have this double top and now we're just trading at this resistance area. So, not unusual to see that, we've had a pretty good move from 175 to 185 that, we kind of break out a little bit, probably retest it, and then I wouldn't be surprised to see something like that. So based on this daily chart, I was looking at this double bottom. So to me, it always starts with a pattern. To me, the pattern then tells me where the likely direction is going to be. So when I see the double top here, it tells me that the direction is going to be lower. And now when I see the double bottom, and again, I haven't looked at this on the weekly, but this is a stealth or rising market over the last 4 or 5 years. And I'm surmising that, there's a lot of blue skies up in this area. And eventually, I think we'll find a way to get in there. But what happened was I sent out an email here and I said, this is the stake in the ground. So sometimes the market just plants a stake in the ground and points where it wants to go. So right back here, when it made an all-time new high, it closed all the way on the low. And it did so here too. Made an all-time weekly high, closed on the low. So that just planted, a stake in the ground, for the longs, a stake in the, dagger in the heart of the longs. And this guy was pointing that we were going to go lower. And now I'm surmising that this key reversal, and I call them key reversals because you can see it made a new low and then closed on the high. And to my mind, that key reversal pointed in the direction that this market wants to go, consistent with the pattern. So I don't just look at these reversals in isolation. So, you see key reversals all over the place. This was a key reversal here and, made a new high, closed on the low, and that should have suggested that. But, that's why I understand you have to look at context. You have to look at the pattern because the market will try and shake you out, just like the magician. So, this key reversal, ordinarily, if you just said, oh, here's Mark's key reversal, that means, we've got a double top here and it's going to go lower. So I don't look at these bars in a vacuum. To me, this is the driving trend. This is the driving pattern. And the lows don't have to be at the same area. They can be asymmetrical. In this case, this low is, the second low is lower than the first. But when you look back, you're gonna, quibble. This is a W. And so right now I'm operating on the premise that this is a W double bottom, and with the word bottom in it, this will find a way to go higher. Now, very often, consistent with these things, you bust through the neckline, and then you retest the neckline, and then eventually this thing finds a way to go back in the direction as indicated by the underlying pattern. So to me, it's pattern, price action, and then I look to confirm the market. So even though, I saw this was a stake in the ground, even though I had this pattern, I still put in a buy stop here. So I still required the market to confirm, and you can see the next day it went through there, triggered the buy stop, and now we're 231 pips higher than my entry point, last week or earlier this week, or I forget which day it is anymore. So that's basically, how I look at opportunities. So to me, the pound Australian looks like it's going to go higher. The euro yen looks like it's going to go lower. Now, one of the other opportunities I'm looking at is gold. So to me, gold, has been putting on this kind of descending stealth bear trend, despite the fact that there's a lot of hype. People think gold's going higher. Let me try and make this a little bit. Let me try and eliminate. Just want to make this thing bigger so we can. Sometimes when you add perspective. So to me, gold is setting up in this descending kind of triangle. So yes, we had this huge, bull wave here, went from 1350, broke out, went all the way to 2100. But you can see, since it went to 2100, every high has been lower. This thing is just kind of getting tired up here. Now, it may just be, the calm, before the storm. Maybe it's just breaking out. There's a couple ways, to my mind, you can look at it. So we have kind of a symmetrical triangle here. And the good thing is we're getting to the business end of this thing, the mature end. So you can see there's not too much more room before this decides to pick a direction. And to my mind, I'm still, camping on the bear side. So we can see it as a symmetrical triangle. I can also make the case that this is kind of operating as a descending triangle also, a descending wedge, if you will. So this is a descending wedge triangle. And as you can see, and we'll look at the, the dollar yen has been kind of operating in the same kind of triangle, where you have, again, the sloping downtrend line characterized by lower highs. And then you have a common low. So to my mind, I think we're going to retest this 1850, maybe get a bounce and then do something like that. And, I just think we're going to come back to this breakout area. So markets have a habit of retesting breakout areas. And, I am surmising that this is what's happening in gold. And I think there's a perfect setup going on today, on the daily charts, where now I have the descending triangle, and then I kind of dig in the price action and see where can I get in a trade for, a good risk reward trade. So within this current pattern right now, I see that we're forming this double top around whatever 1940, 1950 price level, where we had a couple attempts recently, and now we've been kicked back. And so if you're super aggressive, I would simply sneak a sell stop below the low of today. Whatever this low is, we've still got many, many hours for the market to trade, 7 hours. So I don't know what, this is going to look like. And, by the end of the day, if we close very different, if we close, up here versus where we are right now, that could very much change my decision. So this is why I wait for the end of the day. Typically, this close around 5 o'clock Eastern Standard Time for the next session. And so around 4 o'clock, about an hour before the closing, I'll still see if we're, trading, at the low or making new lows or, consistent with my analysis. And then I'll, wait for the next session and then sneak in a sell stop right below here with some kind of risk parameter somewhere up here. This will be my risk, and that's my reward. And so this is how I look to set up these trades. So, if you want to play it real carefully and, wait, this is, got a clear kind of, I think, this, 1885 to 1890 price area to really confirm that this thing is going to turn. There's still a chance we could come, hook back here and, come out here. And I always look at how these, so what I do is I draw my pattern, I put a structure around the market, and then I see how market plays within the structure. So, this is, and I do a lot of like scenario analysis. I play around with various scenarios, and, it's kind of my expectation that we're going to do another touch, another retest of 1850, somewhere down here. Then it's likely we could get some kind of bounce. And so, this is what we've been doing in a sawtooth fashion. And to my mind, this is kind of, what I'm looking for. But, through 3 decades of trading, I mean, I used to get very excited when I would see a descending wedge like this, and market would start coming down. I'd start getting short. And then, what would happen is if it doesn't come down to that area again, and it starts, let's say, coming through here. So it looks like a descending thing, but you can see that this low was well below that. And then if it starts sneaking out here, I have now learned that is, a trap. And, that would be something that, I would look out for. But to my mind, it starts with drawing a structure and having some kind of risk reward scenario. So again, I don't have to be right every time. Perfect is the enemy of the good. So if you put your sell stop here, put your stop loss here, this is your risk, and even if it comes down and then, you get, comes back up, you can move your stop loss. And to my mind, this is a really good trade because either way, I think I'm going to make money. Even if it doesn't fulfill my entire expectation, but I kind of expect this. So I think this gold is setting up for, a really good risk reward trade to the downside. So are there any questions before I kind of, look at another one? I have some. So, okay, Frank is left. Are there any questions about this gold chart, about the pound Australian chart, about the euro yen chart, and how I look at price action? Does it seem like it makes sense? Or is this just, too confusing? So, I really appreciate your comments. I mean, I'm just, blathering on here, and I know how I look at markets. I see markets very visually in my head. I can draw structures around just about everything. And, then I try and, plot the trajectory. So, Mustafa says gold is too confusing. Kajel says, how much are you considering the fundamentals versus the pattern? So I'd say 0, Kajel. I mean, you could, I could sit here for an hour and make the case that, central banks around the world are printing money, they're debasing the currency. There's going to be all kinds of inflation because, we were just issuing new money. And I could give you every scenario in the world, as to why gold, is going to go higher. But now I look at price. And to me, this is the real difference is that you got to turn off the TV and pretend like you're in, 1950. You don't know what's going on. This is the only thing that you should be looking at. And to me, we just have a case of, if it's so bullish, then how come, every low, every high is lower than the last, and every low is somewhat lower. So to my mind, yes, we've been in an up market, but that was then and this is now. So we've been in an up market, and then since this key reversal right here, and like I said, this, these key reversals, they point in the direction they want to go. And so since we went to 2100, we've just looking tired. I mean, every attempt, just can't get going. And eventually this thing, I think, is going to run out of steam. So I do not look at, I don't know what's happening with the stimulus talks in Washington, nor do I care. Because guess what? All of these gold traders are looking at all of those talks. And by virtue of trading, every day, every minute, every day. They're making their decision about what's going to happen, and then they're looking forward. So even if there is a stimulus outcome in Washington, Nancy Pelosi and Steve Mnuchin, make kumbaya and issue a $2.2 trillion package today, and it's all great. The market's already discounted. The market's already thinking 2, 3 weeks, 3 months ahead. We've got an election coming up in 2 weeks in the U.S. All kinds of crazy stuff's going to happen. But the market is already discounting all of that. Bernard, you're welcome. Mustafa says, what effect will the election have on gold? I don't know. The market is betting right now. So I think that you could have one of these scenarios. The election comes out, you get some kind of crazy crap come out, the market bounces, and then it goes in the direction that it was going to anyways. So the market is ahead of events. The market is a discounting force. It's a week, a month, 9 months ahead of where prices are. And I don't know. I've just got somewhat of a little feeling that if I met you back 3 months from now, that we'd have tested this. How do I know? Do I have a hotline to Fort Knox or the central bank? I don't. All I'm doing is looking at price. This is all I do. And all I have to do is get 1 or 2 trades right a month. So if I, put on gold at 1900 and it goes to 1750, I'm going to make a boatload of money. And it won't matter if I've lost 10 trades in between. So D. O'Connor says, this is making sense. I've applied it to gold, and at the moment, I'm up over 100 pips. Michael says, can the same type of argument be made for other metals? So I look at all, my analysis in the same way. So, silver is, somewhat trickier. Again, I try and look at, the chart. Silver, gold is not silver, and silver is not gold. So I try and make independent assessments. So the pound yen could be doing something than the euro yen. But I do see that, silver has a similar situation. We have this triangle here, and what you've done is just risen to the breakout area. So, we basically broke out of this triangle right here, and, prices basically made, kind of try to go back there. It didn't even quite even make the breakout area. And now we're seeing a bit of a top. I think I see it a little cleaner for gold than I do silver. But, what I would watch out for silver is that, it's been kind of sticking to this rising trend line. And, any kind of encroachment through here is probably going to start turning this thing down. And I am looking for a retest of the breakout area in silver around this $19 area. So I do think that we are going to get a retest. Now, we may get one more shot up here to retest the breakout area of this triangle above 26. So I think silver is a little stronger than gold, and for that reason, I would be, a little bit bearish, on gold. So I look at each instrument, on its own merit. Silver is a little bit more, kind of steady than gold. Gold to me looks like it's starting to roll over today. We've dropped from whatever 1940 to 1900 just today. Kajal, I do not understand your question. Mustafa says, I'm currently losing on gold. I'm short. I just need to be patient. I think, Mustafa, you will be eventually paid off. Bruce says, hey, Bruce, I think I recognize your name from a long time ago. Is that the case? Bruce says, I had a question on trading trend reversal, but you covered that earlier, question answered. Okay, yeah. So to me, there's trends, and then, trend reversals, and then we're trying to pick which one. So really the major trend in gold has been higher, but I think a new trend is starting to, going to emerge, not even a counter trend, but maybe even a new trend. So sometimes, the terminology becomes a little bit interchangeable and whatnot, but you can see on the weekly, we were kind of boxing up. Also, we formed this kind of symmetrical triangle on the weekly, and we're kind of getting at the business end. When I say the business end is that you can see that, there's not too much more space to fill here before we start getting a decision on how this thing is going to get, how it's going to turn out. And so, symmetrical triangles are neutral. It could be, a pause that refreshes, or, a reversal out of here. And based on the daily, to me, it's a little bit clearer than it is on the weekly. I could kind of still make the case on the weekly that, this is somewhat intact, and, we could still get one of these. But the daily is starting to show that, it's going to roll over. And, we're sitting on, kind of this funky trend line right here. So, any penetration below 1850, to my mind, will again open up the path to at least where it broke out from, if not lower. So Bruce says, yes, I've said on your webinars for quite a while now. And I remember you, Bruce, from a long time ago. Just haven't seen your name recently. So welcome back, and good to see you. Oh, so Kajel says, even if a war broke out. So again, the market, it prices in everything. The market every day, the market's making a high, a low, a close. And every day, very astute traders, more astute than me, JP Morgan, institutional traders, are buying and selling gold based on, the information. And it's, they've discounted the fact of what's going to happen with the election. What happens if Donald Trump wins? What happens if he loses? What happens if he loses and now Biden's in, and will we start a war with Iran? The market is pricing in all of that stuff. I'm not going to get a headache thinking about it. The market is telling me, the market is voting every day. And by virtue of how it's voting, it starts telling us, and it's a discounting force. So, and you can see that it's, well ahead of its time. So the market, started crapping out 2 months ago. It started telling us that, it was basically over. And it told us in the form of this key reversal, where the market made a new high, close on the low. And when you do that, at the top of a range, and you can see that this was a big range from almost 2100 to 2010, $80 range in one day. And so made a new high, close on the low. And then you can see it had this inside bar. This is what I talk about, the inside. And then you can see how the market just unloads. So to me, these inside days, they just build up energy to, create a momentum in the direction as indicated. Now here, it wasn't that evident. I mean, you did have this key reversal, and then it just crapped out. But what's been happening since that time is that we have a shape emerging. And so we can start making conclusions. Again, I do all kinds of scenario analysis. And, I've been playing around with the fact and saying, okay, is this a double bottom? And it's just like that Euro Yen chart that we saw these double bottoms. And as I said, when you see a double bottom, you should see this. You should see a pattern of higher lows and higher highs. But what happens is that we've had a pattern of lower highs. So if this is a double bottom, then we should have seen something like this, where this is a bottom, and the market now is indicating that it's a bottom. But instead, we have these lows, and every movement within this low has been a lower high. It hasn't been this, it's been this. So this shape almost without doubt, is telling us that the next move is going to be lower. Now, hasn't been easy. Last 6 weeks have looked like this. So we're getting closer to resolve this thing, and I think that that's the good news. So Mustafa, we'll try and work things out. I'll talk to Zach. So Fidel says, how long do you hold your trade on for average? And Fidel, I wish there was an easy answer to that, but it really depends. And I don't mean to hedge my bets, but it really depends on where you are in the market, what the shape is. And so, frankly, I would look, for a big trade on this. But, you could definitely see a scenario where, my first objective would be in the low 18, 50s, 1860s. So you've got about a $50 move right now. And then I anticipate you get in here and you'll get some kind of bounce and then do something like this. So long term, I expect the trade to be here. The first trade I would expect, 50 pips, 500 pips, whatever you want to call it. 500 pips from 1900 to 1850. That would be my first. But how long would I, look to hold it? I would look on average to hold this trade. This is basically my objective. I see it coming to this breakout area. So however long that takes, and it's up to the market. So there's never kind of a duration. What I kind of do is I look at a setup and then, look at, likely objectives. And, how long the market takes, I don't know. It could, come here, it could jam up here for weeks before it goes again. So it's not really the length of time, it's kind of the price action, but it all starts with, a picture, a pattern, and an objective, risk and reward. So, you put your sell stop here, you put your stop loss there. This is your risk, this is your first reward. You've got, 2.5 to 1, 3 to 1, whatever you want. But frankly, this is my bigger objective. So that's kind of how I start with a trade. And how long and how it gets there, that is, that's the, indeterminate part. Theo says, do you take profit on resistance levels? So I fully expect it to, have some kind of resistance at 1850. You may even see it, go through here on the first shot, go back, and then go. So, there are support and resistance levels, obviously. You can see that, this is the resistance levels and, this is the support. So I'm just looking forward to play within this thing, but, I wouldn't totally get out of, let's say it goes to 1850. I might get out of a third of my positions and look for a bounce and then put on more. So I'm very excited about the potential on the downside. So I do look at support and resistance, but, they're, kind of illusory. You could, probably said that this is, support. And I guess when it broke through here, you could have then shorted it. So you could always drive these things. So I always look for a pattern. And to me, this is the pattern I'm looking at. This is a descending wedge triangle. Now, this could be a continuation. So like I said, we could get into a trap where instead of coming all the way down, we come here, it looks like it's a descending wedge, then it starts sneaking out and does one of these, in which case it becomes a continuation pattern. But I think that this will be a reversal pattern where we'll see another retouch or retest of 1850. You may get a bounce, and you're going to get this sawtooth thing, and then it's going to cough up here. So this is kind of, so either whatever it does, I'm going to make money. If it stops short and starts sneaking out, I'll be alert for that. And if it doesn't, and retest the 1850, then I'll know that it's likely going to go to 1750. So I always start by identifying something. I don't just kind of just get in arbitrarily because I don't look at it. And that's the problem with a 15-minute chart. If you looked at a 15-minute chart on gold, it's just you couldn't see the big picture. That's the problem. You may be able to stake out something in the next, but it's just everything's a gamble. The market can go anywhere. You can see went down, went up, went down, and so this is what you're looking at every few minutes on a 15-minute chart. You're trying to handicap the next thing, and to me, even if you're right, it's a heart attack, right? And so you do this enough times during the day, a week later, you can't see the forest for the trees. You can't see what's going on here. Maybe this is support. This looks like here's a double bottom. Here's the support. Maybe I need to buy it here. So this tells you nothing. 15-minute short-term charts, they're a gamble. John says, dollar yen, would it be prudent to continue going short with this trade? So let me finish up with dollar yen, and then so John says, would it be prudent to continue shorting with this trade or closing it out? I'm already in big profits. So I would be inclined to stay with this one. So again, for any of you guys who've known me for any length of time, know that I have been bearish on dollar yen, since the beginning of time, literally. And so this to me is the value of looking at, longer term charts to understand, how to, know the cards you're holding, and then drill down on the daily time frame to find individual trades that conform to a risk reward. So to me, this has every bearish chart pattern, in the book going back to 2015, where you had this double top. And again, for those of you who are uninitiated, double tops, just what it sounds like. Market goes to an all-time high, backs off, retests that high, and now you've got this perfect looking M top. So this is the opposite of the W bottom that we see in pound versus Australian. So what this says is that the market was rallying, and you can't see it in this chart. It went from all the way from 70 to 126. And now with the double top, this is a reversal price pattern, which means that this market is going to be thrown in reverse and trend lower. And that's exactly what you've seen. Since we hit 126 5 years ago, we're trading at 105 now. So again, if we went to a 6-year-old and said, what is this market doing? It's in a downtrend. Now, it's been a difficult one. Obviously, it's a stealth downtrend because, it's been in fits and starts. But that's where you kind of need to understand and not get hoodwinked by, the magician trying to throw you off the thing. So in addition to this double top, you also had a perfect man or woman's head and shoulders. So either way, this is what I call a governing price pattern right here. This is your trading for dummies cheat sheet. You have the double top, you have the head and shoulders, and this is going to govern or dictate price action going forward. And that's basically what it has done. So every time this thing rallies, I know it's just BS. It's just a rally in a bear market. And this is, the difference by understanding the cards you're holding. And you cannot do that on a 15-minute chart. We saw a 15-minute chart is random. So after that double top head and shoulders, we've now been, trading in this descending triangle. So this is exactly what gold, looks like, except gold is kind of like up here right now and heading there to the 1850. So that would be the metaphor for gold. But, you can see that you see these patterns reoccur on all of these markets, under all kinds of different market conditions, pandemics and all kinds of stuff. But it all comes down to the same thing, pattern, price, direction. So you can see that we've been coming down in a sawtooth pattern, just like gold. Gold crapped out at 2100, And ever since then, we've been making lower highs. And it's the same thing for dollar yen. And then we're bouncing off this common low of 104. So we've hit here 6, now 7 times. 1, 2, 3, 4, 5, 6, 7. So, I always say, look, I've heard of a double bottom. I've even heard of a triple bottom. I've never heard of a market that makes 7 bottoms and then goes. A market is not going to give you this long to get into something that's good. It bottoms and goes. So there is just no case to my mind that can be made for a rally that can be sustained. Yeah, you might get, another dead cat bounce off the bottom here to 107, 108. But to my mind, this is a continuum that's going to lead there. So you can see in the last couple of weeks, we've just been kind of going along this resistance line in fits and starts. But, a couple of weeks ago, I said, you had a very clear double top right here. And then you had what's called an H top or a horn top in the form of these funky weekly bars. We had these big weekly bars with this in between. And so you have this horn top or H top. And so you've got every single classic bear price pattern that you could find in any charting textbook, all in evidence on dollar yen. And to me, unambiguous that this thing is going to go lower. But, look, it could, crawl along the bottom for some time until it goes. So the question, how long? I don't know. It could go sideways, but, where it's going to go is unambiguous to me. This is like a no-brainer. This is some trade that you just got to put somewhere in your portfolio and leave it and forget about it. If it goes to 107, short more. So Colin says, you mentioned that you look at the phase of the market. What would be the phase for dollar yen? Well, again, if we, asked a 6-year-old, what does this market look like? Over the course of the last 6 years, is this market going up or is it going down? Is the market going up or is it going down? So Colin says down. I think so. So that's the phase of the market. So you're right. Colin is right. So I start by looking at, whenever I open up a chart, I just open it up and I say to myself, what is going on here? Is this thing trending? Is it, kind of going sideways? What is going on here? And to my mind, this is, again, it plays tricks with your mind because you can say, well, it's really nothing's going on here. It's just kind of been in this, sideways market. It could go up, it could go down. But then once you see the phase, now you look for patterns, price action, and anything else you can put in your arsenal. But to my mind, I open up a chart, whatever that chart is, pound Canadian. Well, what's going on here? This one's a little trickier. This one's real tricky because it's very sideways. And then, I kind of look back in this time frame and see this triple bottom, this quadruple bottom, and feel that, by and large, it's going to make its way higher. But so this is, when I see something like this, it's kind of ambiguous. And so I look for something else that then stands out to me. So I might just pass on this. It looks good. There's kind of a support in this area, but it doesn't turn me on. So I kind of try and drill it down. I'm not trying to trade everything. I'm not trying to dance at all the weddings. I'm trying to find 1 or 2 trades that just stand out to me, maybe a session, a week. I'm not trying to do trades for trading. I might do 15 or 20 trades in a month, which means many days I'm not trading. Some days I could have 3 trades. So I'm just looking for something that stands out to me where I can understand the risk reward, understand the pattern, understand the price action, and then from all of that, try and make, some kind of hypothecation of direction. What I'm trying to do is trying to find something that's going to move from one level to the other. And this kind of looks, difficult. Can I see the next 150 pips? I could probably see it going higher, but it's too ambiguous to me. So what I look for is something that, stands out, like euro pound. Looks like it's kind of got this key reversal going on here. It's making a series of tops, maybe ready to go lower. Then I'll drill back to the daily time frame and see that, it's starting to look like this thing could start rolling over. This wouldn't be my best bet, but I would make a small bet on this, risk 0.5%, on something like this. Has been trading in a channel, and you can see we're at the bottom end of the channel, and now we've got this inside bar today. So to me, an inside bar, is a coil, and, it could unleash to the upside and re-challenge the upside of this bar. But if I'm looking for this thing to go lower, I would just put a sell stop on the other side of this thing. And if the market kept going higher, no big deal. I love those days where I put in an order and the market doesn't confirm what I'm looking at, goes the other way, and then I simply cancel this by the end of the day. But, by virtue of what's going on in here, this thing seems to be coming down, in lower highs. I mean, it is a channel, so it could break out of the upside of the channel and keep going like this. But I feel like this is starting to get tired. This is kind of broken out, and it's starting to tire. So this is the euro pound, and it wouldn't be the best trade I could see. I like the euro yen a lot more. This is still kind of in a stealth uptrend. So there's a bunch of things going on here. And like I said, this wouldn't be my best trade, because this still is a case of, higher lows. And, we may still come here and then bounce. So, this really wouldn't be a great indication. But, I would take a shot on this, a small bet. This feels like it's running out of steam. And, I'd put a sell stop under these lows. And, if I got a bit of attraction, I would, look to get out of that. So that's kind of what I look at. Some trades are better than others, and some trades really stand out. Like today, my trade would be gold. That to me looks like that is really setting up to be a phenomenal trade on the downside. Second, euro yen, and like I said, I'm long pound Australian. So those are kind of my trades right now. And then every day I alert our members. So, we're kind of making a resistance right at the normal resistance area, kind of take a look at how it closes. But, again, I try and play devil's advocate. I got long at 182, and, I tried, say, can I see, this thing now just kind of dropping out of the air like that? Yeah, maybe. But it's, it's got to clear through a lot of price history that it just went through. So I don't think that the price is just going to drop through, this recent history. So this is a very normal place for, pound Australian to rest. And, we'll kind of see if it hangs out and starts going back up. And if it starts losing energy, then, I might get out and reassess. So Selena says, I found to trade long-term with the daily chart, you have to set your stop loss for a couple hundred pips wider to avoid wiped out. Yeah, so that's, basically right. Sometimes the market will get you to a place. So where you identify a pattern and then, it gets really difficult. Where in here, it's just chopping. But, then sometimes the market just gives us a signal. And this is why I call this, in my email, I kind of termed it a stake in the ground. Sometimes the market just gives us a signal where we can just get in and it goes. And, normally you need to, obviously accommodate. Pound New Zealand has been a lot messier. I've also been a fan of the long side of Pound New Zealand, and Pound New Zealand's been a lot messier. But sometimes the markets just give us, a thing. I call this an insurance day bar when we see these reversals. And a reversal to me is just what it sounds like. The market makes a high and low, but then it closes at the high part in, after you have the pattern. So you have the pattern and then this thing, and then this just indicates this is, and why I call this an insurance day bar, because this key reversal tells me two things. First off, it tells me where to get in, to catch the next momentum, right? So I put my buy stop just a hair above the high of that day. In that case, it was 182.01. And then it also tells me that the risk has basically been taken out. Because what this key reversal says to me is that the sellers earlier in the day tried to take this thing lower. And then by the end of the day, these sellers were wiped out. And if they stay in and they get obstinate, it's just going to, so this creates this insurance, where what your risk is. This is basically, your risk. It's been underpinned. Very unlikely that, you're going to take out the low. And so that's why I call these insurance day bars. So sometimes, yes, you do need to, keep your stops pretty wide, like gold. If you want to catch gold, you might have to risk till today's high, which is, $40 away. So you can see gold is really crapping out, as we're speaking here. So let me just see what the high today was, somewhere around 1926, and so you're at 1899, so you've got 270 pip risk. I mean, I don't think you need to risk that much, but theoretically that's, the high of today is where your risk is, and your reward is, 1750, some 20, 1500 pips lower. So yeah, sometimes you in order to accommodate volatility, but some days like today in gold, I think, you're getting one of these reversal days that the risk has been underpinned. Now, where it closes, sometimes it could snap back somewhere back into the range. So you do have to give it, back to, 1915 or 1917, or, sometimes it's a little bit arbitrary where to put that stop loss. But I think that this is good to go. I do not think, we could still tank today. This is just tanking every minute. So I can't say where we're going to stop. But if this was what it looked like by the end of the day, you could come back into this bar. You could get another rally, back to, 1910 or 1915. So you would need to give it some room. And that's the thing. If you're looking to make, 1,500 pips, you can't risk 10 pips to make 1,500 pips. So it's all about risk reward. So my objective is here, 1,500 pips. So, if I have to risk, 150 pips, for those 1,500, that's a 10-to-1 risk reward. And that's fine. And guess what? You can still take a 0.5% risk by risking 150 pips. You just set your position size smaller to accommodate this coming back, 150 pips before it goes. So yes, you're right, Selena. You do need to accommodate these trades. Sometimes these trades just give you a point in time where they just go. They just, hook, they give you a key reversal, and then they go. And, if you're patient and wait and stand back for these trades, they tell you where to get in. Bruce says, I like the drawing tools on Ninja charts you use. Do you use Ninja Trade and place your trades? I don't. I use Ninja just as their chart package. So I have no affiliation with this company, by the way. I'm not paid anything. So I just use it, to illustrate what I'm looking at. You can use any, you can see I don't use anything fancy. There's no Bollinger Bands, there's no moving average, there's no volume, there's nothing on this chart. What I call a naked chart because it doesn't have any indicators on it. So it's just price and time. So you could use Netdania, you could use MetaTrader, you could use anything that I just need a high, low, and close. I can, look at this anywhere. And then once I start seeing, a trend, I try and figure out, okay, how do I get in the trend? Or if I see a pattern or a reversal, then, I try and figure out how do I get on that. Mustafa says, is this similar to candles? So I'm old school, to me, candles really obscure, when they kind of, have a kind of thing here. I don't see that. I'm sure if I learn to read candles, I may see, but to me, this is very clear. This is why I use bar chart. Makes a new high, close on the low. My mind, I can just see this really clearly. Even this didn't turn red. This was a reversal, made a new high, and it closed on the low of the day. So, it pointed in the direction it was going to go. And you have enough of these. Here you made a new high, close on the low, new high, close on the low, and you had a nice move here. So here you made a very benign looking new high, close on the low, and then you had a really nice trade out of that. So I just see bar charts much cleaner or clearer than I do a candlestick. But whatever you find that brings you a strategic edge, what I look for is, trend, direction, or shape. And you can see the shape on, candlestick or whatever. So once I start seeing this shape, then, I kind of have a way of looking at prices within the shape that just suit my eye. But it's just something that I've been doing for a long time. And, I just find I can see this a lot cleaner or easier. But I suppose if you use candlesticks and you understand them, you may be able to see the same thing. So a harami and a reversal, are pretty much the same thing. A doji, whatever you want to call them, and a reversal, it's somewhat interchangeable. I just see bars, and then I look at how the bars stack one on top of the other, and this is what I've been doing for too long, and so too late to teach an old dog new tricks. But whatever is your preference, and whatever gives you a strategic edge is going to work. So Selena says, thanks, Mark. I just shorted gold at $18.99. I'll see it happen. So Selena, I think you're going to be richly rewarded. So Lem says, should we wait till the end of the day to enter a sell stop in gold? That's typically what I do. I wait for the end of the day because, guess what? By the end of the day, some news could come out. And if we're trading up here, that's going to be a whole different bar than what it looks like now. I mean, I feel pretty confident. I know what I'm looking at. And this is going to end up, perhaps, potentially even much lower than where we are now. And typically I wait for the end of the day to make my trades. And then I set up my risk reward on how it closes and things of that nature. I find if you trade it, and you chase things, you get more emotional. And yes, today it could work out. I do feel if you shorted gold, it's going to work out for you. But typically, I don't chase trades in the middle of the day. What I like to do is just calmly assess things. So, if this is the end of the day, and let's just say this is where we are, and, I would place my sell stop, somewhere, below the low. But let me kind of make one point. Let me say I put my sell stop under the low, and then the next session opens, and it just opens where, it closed, and then it starts going lower. Now, in this case, I mean, that could still happen, and it could still go lower. But, typically, like on a Sunday or something, if a market closes really on the low part of the bar or close to it, what I would really advise is wait a little bit. Don't just immediately stick your order in and wait for the market to open, and then if it goes lower, yeah, you're triggered in, but then it could, if it starts going higher into the next session, then you could be stuck for the whole next session. So what I prefer to do, under most circumstances, is to see what I call the rubber band effect, where the market closes, and then what I like, even if I'm looking for the market to go lower, what I'm looking for is the market to kind of go higher into the next session, and then if my order is good, it'll come down. But now it's got the energy. It's like kind of an elastic band. When you pull it back, it's got that energy just to shoot out of there. Conversely, if we just open and we go, and especially if it's a bigger range bar, it's going to try and get back into that bar. So it's a little bit of a nuanced discussion, but there you have it. All right, guys. So I hope you got some input or value out of this session. To my mind, I look at things very objectively, and especially with something like gold, where there's so much emotions, there's so much information. You have huge entities, like JP Morgan buying all kinds of, bars in gold, and you have all kinds of stuff that can validate. If you want to see something, I can find 100 articles on why gold should go up, and probably 50 articles on why gold's going to go down. I think people are inherently afraid to short gold because if I asked you about gold, you would automatically have some knee-jerk thing about inflation, central bank money printing. You've seen these commercials on on TV, buy gold. And so you have some residual emotional and unobjective attachment. And if I say gold, I would say most of you think, well, it's gold's something that you buy. And so now it's very difficult to say, well, going into an election, going into, what could be a shitstorm here, you should be short gold. That sounds like, you'd be really exposed. But this is why price is the only thing. You've got to look at all of this stuff in a vacuum and say, what is this telling me? And then watch how it plays out within a structure. So like I said, if, we have a debate tonight and we have election and market makes a move down here and then stops short and then looks like it's not playing nice anymore within this triangle, then maybe something else is going on, and then you react accordingly. So nothing is set in stone, but I look at these shapes and set up my trades accordingly, and not every trade has to work out. But if you catch just one, I can think of a handful of trades over the last 2 years that have made me a fortune, and the rest are I make money here, I lose money there. But I think this is one of these trades that is going to bear fruit. This thing just feels like it's coming down. So Bruce says, I always get good info, Mark. These keep me focused on the technique and keeping emotions at bay. Theo Connor says, thanks very much. The session has been more understanding and I've thoroughly enjoyed it. Mustafa says, this has been incredible. Thank you, tons. So really would appreciate your input. If you feel so inclined and want to post a review on our website, I'm going to put that. You can read other people's reviews if you're on the fence about our elite program. We have hundreds of people around the world, and they really seem to enjoy it. And if you stick with it, you're going to make money over time. I have not lost money in any year since I started the Pattern Trader. Michael says, very interesting, many thanks. And coincidentally, your gold sell stop recommendation has just been triggered. That's right. I think I had a stop recommendation on the weekly charts. Colin says, cool. Thanks again, Mark. Amazing how you see these things so effortlessly and consistently. Yeah, so appreciate that, Colin. I've been doing this a long time, and I try and sort And that's the thing, you try and sort the nonsense from the reality. And the market throws, will try and throw you off the scent as much as it can. The market will throw you a million curves. But if you just understand, so even during this, this recent upsurge in gold, yeah, it's been going up for the last couple of weeks, last several weeks. These are daily. So, this is 2, 3 weeks. This has been going higher. But the thing is, I've been saying to myself, yeah, but, every, high is lower. So, yes, we got kind of this stealth thing. You kind of get sucked into it. You get a lot of churn here. You wonder what you should be doing. And then it kind of makes a move up and you say, this is it. And so, you really just got to keep your eye on the ball. And sometimes it's very difficult, in here, this is what's been going on in October in a lot of trades where it's up, down, sideways and nowhere. And if you're following this on a 15-minute chart, by the end of in 2 weeks, you're done. You're toast. It's like you can't figure out which way's up or down. But if you stand back and understand that this has just been a case of lower highs, then it separates the wheat from the chaff. So as we say, and so I do think that we're going to get a retest down here. So Mustafa says, I've learned to be mature through your videos, great content. So Mustafa, thank you. And again, any input that you have, if you want to post it on our review website, that's great. And then any input you want to give me now, it's really constructive to help me because I so much of this operates kind of within my mind. I've learned to see the markets and the shapes by looking at these freaking markets for 30 years now. And I don't always feel like I can confidently, describe what I'm seeing in my brain. So Bjorn says, you said you placed the gold trade at the end of the day when? So typically gold will, go into a new session at 5 p.m. Eastern Standard Time. It will shut down for an hour. So the brokers at 5 p.m. to 6 p.m. Eastern Time will shut the market down, and then they will reopen. So, I send my signals usually between 4:30 and 6 p.m. Eastern Standard Time. So you should get the trade before the reopening and then place your trade accordingly. So I send my trade out, my email at about 4:30 or, between 4:30 and 6. You get the trade, you place your sell stop and let the market do all the work for you. I usually have a stop loss behind it. And then I put a take profit. And I usually put the take profit, at some point away. And it's arbitrary. And I want to see if I'm right. I want to see if the market starts, taking shape and going. And then I might just remove the take profit and keep moving it down and down. I'm not going to get in the way of something that is going to bear more fruit. So I usually start out with certain parameters and then I move them, if I see the market is conforming to what I think it's going to do. So Anthony, I think, is a newbie here, and he has said, he's lost, and he doesn't understand what a short is. So short is so if a market's going up, you say if you want to buy it, you say you're going long, and if a market's going to go down and you want to participate in that direction, most people wait for market to go down and then buy it, and then buy it down here. To my mind, there's a lot of money to be made on the short side. Or sell side. So if you short something, you're just selling something in the expectation that you're going to make money if it goes lower. But I'm not going to get into a whole detailed discussion of that, Anthony. It sounds like you're a beginner. There's a lot of stuff on YouTube, or ask your broker if you're kind of not familiar with a lot of these terms. Bruce says you explain things really well, easy to follow along with what you're saying. So Bruce, thanks again a ton, and it's great to see you back. Mustafa says, I must get into the elite program, just need to. So I'll figure that out, Mustafa, and I'll talk to Zach. We'll work something out. All right, guys, I think I'm going to love and leave you there. Thanks a ton for attending. I hope you got some value out of this session, and I will see you next time.